Hey tech aficionados, welcome to the Thursday edition of the Tech Stocks Daily Podcast, where today's tech stock updates are nothing short of a thrilling adventure. We've got Google shaking things up with its new AI assistant strategy and a revenue report that's a hair's breadth from Wall Street's prediction. Meanwhile, Zoom is gearing up for a big reveal on its AI transformation in its upcoming earnings report. Let's not forget Zeta Global's upward earnings projections and intriguing options trades keeping us on our toes. And for the drama lovers, AppLovin is making headlines with some eyebrow-raising accusations about their ad practices. Each sector has its own plot twist, so stay tuned as we dive into the top tech tales shaping the financial markets today. All right, folks, grab your digital popcorn because today's headliner is none other than tech giant Google. The buzz is all about Google's strategic reshuffling of its AI assistant, Gemini, particularly for iOS users, which has everyone talking. Let's break it down. Google Inc. under the ticker symbol GOOG on the NASDAQ, made a significant decision to remove Gemini, its AI assistant, from its main app on iOS devices. Instead, the tech-savvy are being nudged towards downloading a standalone Gemini app from the iOS App Store. What's the reason behind this move? Well, tech whispers suggest it's a strategic maneuver to bolster the standalone app's visibility and engagement. Yet there's a catch. The main Google app is a powerhouse in terms of usage, so asking users to hop into a separate app might limit Gemini's reach among casual users. It's like owning a cafe inside a bustling mall and suddenly deciding to put a bit of your best espresso in a kiosk across town. Now here's the juicy part. Alphabet, Google's parent company, reported its fourth quarter earnings, showcasing a revenue of $96.5 billion, a healthy 12% growth annually, but just a smidgen short of Wall Street's expectations of $96.6 billion. Ooh, so close. On an earnings call, CEO Sundar Pichai hyped Google's expansive digital footprint, revealing that 7 of their products boast over 2 billion users each, and all of them now incorporate Gemini in some form. He further flaunted Google's AI prowess, mentioning that their generative media models, with Gemini at the center, are leading industry benchmarks, which is tech speak for, hey folks, we're doing better than the other guys. Here's a fun fact. More than 4.4 million developers are grooving with Gemini models. This is double the number from just 6 months back, a stat that sounds straight out of a How to Dominate AI playbook. This upswing underscores Google's commitment to making AI accessible, steerable, and downright indispensable in the developer community. Speaking of stocks, Alphabet's Class A shares dipped a minuscule 0.086% in after-hours trading, a mere whisker. Meanwhile, Class C shares took a wild nosedive of 70.069%. But hold your horses, that figure seems to be an anomaly or typo because it's quite the jaw-dropper if taken at face value. During the regular trading session, both Class A and Class C shares were basking in positivity, notching up 0.82% and 0.72% respectively. It's like the stock market equivalent of binge-watching a thriller. You never quite know where the plot twists will take you next. In the grand tapestry of tech evolution, today's move by Google highlights the growing emphasis on standalone apps in maximizing specific functionalities. Whether this play will embolden Gemini's usability or curb its adoption remains a topic for the tech analysts. But one thing's for certain. Google's not slowing down in its mission to integrate AI into every digital nook and cranny. Stay tuned as we watch this split-level hopper unfold, because when it's Google, the plot is always as thick as it gets. Zoom Video Communications is buzzing in the tech world today, as anticipation builds around its impending fourth quarter and fiscal 2025 earnings report, due on February 24th. Investors and analysts are keenly focused on this report, as it will provide insights into Zoom's performance and strategic directions as the company continues to evolve from being primarily a video meeting service to an AI-first work platform. The excitement surrounding Zoom's earnings stems from several key factors. Firstly, Zoom has been implementing a new AI platform strategy, which has allowed for price increases and promises to drive future growth. As AI becomes increasingly embedded in its offerings, it's anticipated to bolster not only Zoom's technological appeal but also its bottom line. However, the costs associated with these innovations are likely to put pressure on margins, making the report's insights into financial performance even more critical. Another primary focus is Zoom's guidance for fiscal 2026. Analysts are eager to hear about the company's growth expectations and how new market strategies, particularly in AI and pricing models, will influence its trajectory. Zoom's past earnings reports have consistently beaten expectations, with a track record of positive earnings surprises. This track record creates pressure to maintain that performance streak, especially since the stock has seen a robust rally over the past 6 months, rising by 41.3%, significantly outpacing the broader sector growth. Zoom's enterprise sector also garners attention. While the segment isn't expected to see a surge in growth, the fact that churn rates have lowered and customer stability has been achieved is a positive signal. Moreover, a wave of renewal opportunities is approaching, involving contracts originally signed in the height of 2021-2022, which could potentially uplift revenues. Meanwhile, Zoom's competitive landscape provides another subplot to this earnings narrative. The shuttering of Amazon's Chime, a direct competitor, might offer Zoom some breathing room in the UCaaS space, although competition from giants like Microsoft Teams, RingCentral, and Cisco's WebEx remains fierce. These rivals are continually advancing their offerings, meaning Zoom must demonstrate both its innovative strengths and customer loyalty to stay ahead. Financially, Zoom remains on sturdy ground, backed by a formidable $7.7 billion in cash, along with an ongoing $2 billion share repurchase program, offering a safety net against potential economic headwinds. However, its valuation, indicated by a forward price-to-sales ratio higher than the industry average, suggests high investor expectations mixed with elevated risk. As Zoom reaches this critical juncture, the narrative of its fiscal 2025 earns more than just a side note. The company's success in transitioning to AI-driven offerings, maintaining customer satisfaction, and enhancing its competitive stature will not only impact its stock, but will also resonate within the broader tech landscape. For existing and prospective investors, the upcoming earnings report is a must-watch event that highlights both the promise and challenges facing Zoom as it seeks to solidify its role as a technology leader in the post-pandemic world. All right, tech enthusiasts, let's dive into why Zeta Global Corporation is making waves today. First up, we're looking ahead with Zeta Global as they prepare to reveal their fourth quarter 2024 earnings on February 25th. The anticipation is real, folks. The consensus estimates suggest their earnings might rise to a swanky 23 cents per share, marking a 35.3% year-over-year jump. Not too shabby, right? Revenue forecasts are also looking lofty at $295 million, indicating a year-over-year growth of 40.3%. These projections have turned heads, as the company has a track record, having surpassed expectations in 2 of the last 4 quarters. However, it's been a roller coaster with a mixed history of missed earnings and positive surprises, resulting in an average negative earnings surprise of 10.5%. Zeta Global has been pressing the pedal on innovation, particularly with its AI-powered intelligent mobile solutions. Their tools are designed to supercharge marketing strategies across channels, enhancing customer experiences and boosting business outcomes. Indeed, this AI expansion within their marketing platform could very well have galvanized customer demand, contributing to their projected top-line growth. And while their shares have skyrocketed an impressive 133.7% over the past year, leveling up against competitors like LiveRamp and Bit Mining Limited, there's still some skepticism hinging on whether Zeta can pull off an earnings beat this quarter. Now turning to the world of options, which just got a bit more intriguing, there's been a flurry of activity with bigwig investors making moves with unusual options trades. A hefty $670,453 worth of call options against a much smaller $36,128 worth of puts has been spotted. What does this mean, you ask? Well, it's like drama unfolding in an options soap opera. These substantial trades suggest that high rollers are bullish on Zeta, possibly due to insider knowledge or a strong hunch. Such activity typically alerts everyday traders like us to watch closely. There's something brewing, an opportunity might be knocking. Despite all this bullish sentiment, Zeta has some challenges on its plate, like managing acquisition expenses from their Live Intent buyout, which could pinch their bottom line this quarter. Also, payment delays from their agency customers might put a wrinkle in their financial forecasts. In summary, Zeta Global is at a fascinating juncture where innovation meets investor curiosity, making it a stock to watch right now. Whether you're a seasoned trader or just getting your feet wet, Zeta's story today is all about what's underneath their technological innovation and investor behavior. So keep those eyes peeled and wallets ready, because Zeta's ride seems to be far from over. Hey there, tech lovers. Let me catch you up on why AppLovin is the talk of the tech town today. So get comfy as we dive into the drama surrounding the mobile app company that's got investors raising their eyebrows and, well, looking under the hood. First up, short seller The Bear Cave has shaken things up with a scathing report accusing AppLovin of sketchy ad practices. According to the report, AppLovin's meteoric rise, an eye-popping 750% increase over the last year, might not be all sunshine and rainbows. The Bear Cave suggests the surge is fueled by questionable ads, linked to shady real money gambling apps. They've spent countless dozens of hours gaming in the AppLovin universe and found ads that are misleading, predatory, or sometimes just plain impossible to click on. Now, AppLovin had recently shown off some impressive numbers with a glowing 44% revenue growth report. Happy days. But then, boom, the stock took a nosedive by 10.4% and was trading at $442.78. Talk about a plot twist. The Bear Cave insists that some of this growth might be as suspect as finding cookies under your bed that you didn't even know you were hiding. They imply AppLovin is leaning hard on these misleading ads, including spammy pop-ups in games. 11 ads during just 40 seconds of gameplay, they say. Meanwhile, AppLovin is more than just its ad tech corner. They've been classified as a high performer in the business services and technology services sectors. They're topping the charts, showing a total return of about 52.6% for the year, significantly outshining their peers with a Zacks rank of number 1. Let's sprinkle some confetti for that. Yet, given the firm's colorful week, one wonders how these dark clouds will affect their sunny sales narrative. Will their reputation for market-steady growth and performance buoy them through this storm? Or will this revelation have a more lasting impact on investor trust? We're on a stage where controversy meets achievement, and you, our trusty tech tribe, are the spectators. Is AppLovin the misunderstood genius with innovative advertising methods, or kind of like that weird uncle with exaggerated stories during holiday dinners? Are the Bear Cave's concerns about fraudulent ads legit, or do you think it's just a storm in a teacup founded on hyperbole rather than hard facts? I'm curious to know what you make of this stock shakeup. Hit me up in those comments below. Do you think AppLovin has genuine growth momentum? Or is this allegation a real stumbling block for them? Let's chat. I can't wait to hear your takes on this tech twist. All right, Tech Squad, let's zoom in on Google, or should I say Alphabet. Now, given the current events surrounding Google's AI assistant strategy with Gemini and the slight earnings miss, it's a tricky yet intriguing decision on whether to buy, sell, or hold. From a buy-sell perspective, here's what stands out. Google's strategy to push for a standalone Gemini app highlights their commitment to elevating AI functionalities. Expanding AI capabilities across their platforms is shaping up to be a major move, possibly five-dimensional chess, setting them apart from their competitors. It sounds like a savvy pivot to capitalize on the growing AI market, combined with sustainably impacting user engagement. Moreover, Alphabet's overall performance is still strong despite the oh-so-close revenue miss. With many products already boasting user bases of over 2 billion each, having Gemini at this core can significantly influence recurring revenue powered by AI adoption. This means great potential for continued growth. Let's sprinkle some candy on numbers. The dip in after-hours Class A shares, plus the huge caw-caw anomaly in Class C, presents an opportunity for growth investors to enter a position at a slight discount. It's a temporary creation of market volatility, not a suggested downward trend. So where does that leave me on this roller coaster? Considering these factors along with Alphabet's excellent track record in embedding AI successfully into products, I'd lean towards a hold with possibly an inclination to buy more, especially during slight dips. This move gives the inside scoop on Google's future plans with AI, using their robust digital footprint to carve out a thematic advantage. Of course, do your own homework, because investing isn't just about potential. It's about understanding and aligning risk with your investing style. Stocks have their ups and downs, and while the Google giants might roar back with uncanny precision, it's always important to evaluate your position based on personal growth targets, risk appetite, and of course, any new announcements from the tech bigwigs. What do you guys think? Is Gemini hyped enough to fuel your buying spirits, or are you holding your cards for the next tech twist? Rub those comment keyboards and let me know. Wow, today's tech scene was like a virtual roller coaster, with Google shaking up the AI game by spinning off Gemini as a standalone app for iOS. Meanwhile, Zoom keeps us on the edge of our seats as we eagerly await those key earnings reports to see how they're transforming into an AI powerhouse. Zeta Global and AppLovin brought their own storms and sunshine with intriguing earnings projections and drama from ad practices, respectively. Each move adds another layer to the fascinating narrative of the tech world, and it's clear the pace isn't slowing anytime soon. Now, if you had a blast catching up with today's tech highlights, don't forget to click like, hit subscribe, and share the tech love with your friends. Make sure you join me again tomorrow for another dose of tech news excitement. Keep those notifications on because you won't want to miss what's next on the tech horizon. Thanks for tuning in.